Hello students, in my last video we had done our chapter money. This is a unit 2, money and banking. So the second chapter of the unit is banking. I hope so everyone is very much familiar with the banking system, and you know we are having two types of banks. One is a central bank and another one is a commercial banks. So today we will be starting with central bank. If we talk about central bank is the apex bank of any country. It controls the entire banking system of the country. It is a sole agency of note issuing and it manages all the foreign exchange in the country. In India, RBI or Reserve Bank is a central bank. So central bank, the main bank, apex bank means the prime bank of any country which controls the entire banking system. All the other banks functions under the central bank. It is the government's bank and it is an autonomous body named as Reserve Bank of India in India, and all the countries have their own central banks which they call by different names. So now we would be doing the functions of central bank. The function of central bank. The first function that the central bank do is the bank of issuing notes. We know that all the notes in India are issued by the central bank. I think all of you had seen the currency notes. On the currency notes you find the signature of the governor of RBI. RBI issues the note. They are the legal tenders which has to be accepted by everyone in the country. No one can refuse those legal tenders, and it is the central bank only which is having the exclusive right of issuing notes. This function is also known as currency authority function of central bank. Currency authority means only this bank is having the authority to issue the currency. Hope so this function is clear. Now the next function is banker to the government. If we talk about banker to the government, government do not open the account in commercial banks. We can say SBI, Punjab National Banks. The government has the bank which is the central bank. It opens all its accounts in central bank. So the banker to the government, the bank acts as three facilitators. One is a banker. As a banker, RBI manages the accounts of the government. All the accounts of the government are open with the RBI. Second, agent. The RBI is an agent to the RBI is an agent to the government. As an agent, what RBI does? RBI buys and sells the securities on behalf of government. Now here you would be having some problem. Agent. Agent means acting on behalf of someone else. Now the RBI acts on behalf of the government. Whenever it finds that the government money is lying unutilized in the RBI, then what it does? It buys the securities. Securities means shares on behalf of the government, or we can say it invests the government's unutilized money which is lying idle with the RBI. Hope so agent is clear. Agent is a person who act on behalf of the principal. So RBI is agent here. It's acting on behalf of the government. The third function is the advisor to the government. Advisor to the government. Now on all the financial issues, the central bank advises the government what to be done. The central bank collects all the data regarding to financial matters. So it helps the government to frame the financial policies. It also gives the loans to the government in time of fiscal deficit. Whenever the government's revenues are less and the government expenditure is more, the government get loan from RBI. This is known as deficit financing. When government takes loan due to having more expenditure than the revenue. Afterward, we are having banker's bank and supervisory role. Here we are having two functions. One is a banker's bank, another one is a supervisory role. As a banker's bank means the bank has the same relationship with the RBI that the commercial banks is having with the other peoples. As we go to the commercial banks, like I am having my account in SBI, so what I can do, I can put my extra funds right over there, I can take loan from there. Similarly, the RBI acts as a bank to the government. Government, when having surplus amount deposited with the RBI, whenever the bank needs the amount, it takes loan from RBI, not from the commercial banks. As a supervisory role, supervisory means the central bank is supervising all the commercial banks in the country. It fixes the rules and regulation, or it helps making the rules and regulations, guidelines for the commercial banks, how they are going to act, what would be the cash reserve ratio kept by them, what would be the statutory liquidity ratio, how the banks would work, how much credit the bank should give to the people, and all such guidelines are given by the central bank to the commercial banks. The next function is lender of last resort. Lender of last resort means that at the end, when we are having no help, we can get help from someone. Such is a case of RBI. When commercial banks gets money from nowhere, at that time the central banks come for the rescue. Students, when does it happen? You know, the commercial banks keep a certain part of the cash with itself and give the rest of the cash in the form of loans to the public or the producers. Now, when someone goes to the commercial bank to withdraw the money and the bank do not have the cash to give to that customer, at that time the word spreads that the bank is in crunch of cash. Bank is not having cash with it. What will happen when such a customer comes out and they tell many of the other persons that the bank is lacking of cash? Then all the persons start going to the bank and ask for cash. And in that situation, when the commercial banks do not have cash and it have to give to the people, if it is not able to give, it will lose confidence of its customer. The people will start saying that the bank has become bankrupt. To save itself or to build the confidence of the people in itself, then what the bank do? Bank takes loan from the RBI to pay off that customers, so that the people do not lose faith in the banking system of the country. The next function is custodian of foreign exchange. Central bank is a custodian of foreign exchange, reserves of the country. All the foreign exchange is routed through the central bank. It's only the central bank which exchanges the foreign currency. So the rate of the foreign currency is also maintained by the central bank by selling or purchasing the foreign exchange. It is also known as managed floating or dirty floating. Students, managed floating is a topic which is coming in our further chapters. We will be discussing thoroughly right over there, but right now you have only to understand that the foreign exchange rate, the stability of the foreign exchange rate is controlled by the central bank through managed floating. The next function is clearing house function. If we talk about clearing house function, all the commercial banks have their accounts with the RBI. The banks draw checks on each other. When the banks draw checks on each other, they need not to transfer whole cash. Only the extra amount is transferred to the other bank's account. Suppose there is Bank A and Bank B. Bank A has to give Bank B 15,000 and Bank B has to give Bank A 10,000. Then only the transfer of 5,000 from Bank B to Bank A is sufficient. This saves the requirement of the cash, or this reduces the requirement of the cash. In this way, it acts as a clearinghouse function. Now the last function that the central bank performs is a control of credit. If we talk about control of credit, the central bank regulates the commercial banks. It makes all the rules and regulations for the commercial banks. We had studied it earlier. Now, in the situation of inflation, when the prices are rising, the supply of loans is restricted, or the central bank instructs the commercial banks to give less and less loans so that the purchasing power of the people could be reduced, and the credit and the situation of inflation is tackled. When people are having less purchasing power, the situation of inflation will be controlled. What central bank do in case of deflation? It liberalizes the supply of credit. It tells banks to supply more and more credit so that the purchasing power of the people increases. They purchase more, do more expenditure in the economy. In this way, the situation of deflation is controlled. So students, today we will do only the functions of central bank, and in our next chapter we would be doing other concepts.